discuss about the tax rates of STCG, short-term capital gains. So we have made some gains by selling the capital assets. Now we have to calculate the tax for those gains. So basically it is divided, it is categorized based on section 111A. If suppose the for the categories that fall under section 111A, the tax rate is 15% plus surcharge and cess as applicable. If suppose the capital asset that doesn't fall under section 11A, the tax rate for those categories would be determined based on the tax slab, determined based on your tax slab. If suppose if your overall income is 2,50,000 like that, then the tax slab that fits your income is first slab. So 0 to 2,50,000 is the first slab, for that 0% tax. 2,50,000 to 5 lakh is the second slab, for that 5% tax. 5 lakh to 10 lakh rupees is this is third slab, for this 20% slab, 20% tax. Above 10 lakh it's a 30%. So if suppose if your income, overall income falls in any of those categories, then you need to pay the tax based on the tax slab rate. Now we will try to classify the capital assets that falls under section 11A and that doesn't fall under section 11A. So these are the categories that fall under section 111A. So first category is sale of equity shares listed in a recognized stock exchange. For example, if you are buying equity shares in a recognized stock exchange in India like BSE or NSE, and you are trying to sell the equity shares to the recognized stock exchange, the gains that you make from the sale will be categorized, will fall under section 111A. And then units of equity oriented mutual funds to a recognized stock exchange, and then sale of units of a business trust. So these are the three categories, and the fourth category is an exceptional one. Here this is the international financial service centers. So this section 11A not only covers the Indian stock exchanges, recognized Indian stock exchanges, but it also covers the international stock exchanges. STCG arising on sale of equity shares, equity units of equity oriented mutual fund, or units of a business trust are recognized stock exchange located in any international financial services center, and consideration is payable or paid or payable in foreign currency, even if transaction paid is not chargeable to securities transaction tax. So what it states is, suppose if you are trying to buy and sell equity oriented equity shares or equity oriented mutual funds or units of business trust to a recognized stock exchange in any international financial services center via foreign currency, then that would be categorized under section 11A. And these are the categories that fall under section 11A. Now we are going to see the categories that don't fall under section 11A. Here first category is sale of equity shares other than to a recognized stock exchange. For example, if you are trying to buy and sell equity shares via third party dealer, then that won't be considered as a recognized stock exchange. So that won't fall under section 11A. And then CST is arising on sale of shares other than equity shares. So if you are buying other than equity shares, so there are many categories of shares. So if your capital asset falls under that category, then that won't be considered as section 111A category. And the third point is sale of units of non-equity oriented mutual funds. Example, debt oriented mutual funds. Suppose if you make any gains by selling the debt oriented mutual funds, then that won't be covered under section 111A. And then sales on debentures, bonds and common securities. And then this is important point. Suppose if you are making any gains by selling the immovable property like land, building, etc., then that won't be covered under section 111A. Similarly, gold and silver. So for that, the tax rate would be based on the tax rate that we fall. For the categories that fall under, that covered under section 11A, the tax rate would be flat 15% plus surcharge and cess as applicable.